Welcome to another video of our weekly analysis. My name is Khalil. Thank you for joining. Um, so this week was a big week. We had a lot of data coming in this week. We have CPI, FOMC minutes, rate decisions. We also had retail sales, but we weren't too worried about that this week. We were just mainly focused on those three. As for last week, you know, um, NFP showed good data, so it's kind of bearish for gold, and we kind of had a feeling that for the rest of the week it'll kind of play out and follow that, or it'll either follow that or range until we see the data coming in on Tuesday. So I think CPI came in first on Tuesday, and we were just waiting on that. So it'll either play according to last week's bias, or it'll range. So those are one of our two options. So let's dive into a little bit of analysis for this week. We saw that it was in this trend. We saw it broke out of this trend here, and it broke past the 4-hour resistance that we had. So after we saw it break the trend line, we could have taken a trade here. Here, could have taken a trade here, and this would be your weak support. So just think of this: when it's in a trade, you got this lower high here, and then this lower low here, and essentially the lower high in this scenario, since it is downtrend because of the news that this is strong, this is weak. So this is always a good take profit, whether you see that it will wick past or just straight go past, and it's because it's in the trend. So if it's in trend, we know that we'll either have some fake outs or something of the nature. If there's no news that comes out before, then or if there's no news that comes out during, then we know that that something like that will happen, right? If you are basically a supply and demand trader, it still applies, so you could take profit here. It'd been a decent trade. It'd been 1 to 1.5, and it actually tapped that twice, came and tapped it again. So either way, it'd been a good trade. That's not something that we took. That's something I could have taken. So yeah. So we saw that it broke past this. We saw that this level was coming up. Just to go to a lower time frame to look into this a little bit better. So we saw this level here. Honestly, we were playing a 007 move, so 007 here. That's something I learned from my boy Roy. Well, he's not my boy, but that's somebody that mentored me at some point. And I love that strategy. If it touched it once here, touched it another time here, touched it again here, you can either trigger. You can be patient. You can be patient on this one, or you can trigger your order here. One of the three. So I decided to wait just a little bit, and I did this engulfing. And in this case, I would have put my stop loss up here, if anything, right? So let's say the trade on the close, and honestly, right now I don't really know what my take profit would have probably been at the beginning of that leg. Take profit could have been here at the 200, at the 100. I could have been a trade, right? 1 to 1.64. I mean, that could have been our trade, but I didn't do that. I went to wait for more confirmations, and that's what I did. So I waited until it broke past kind of this general level again, and then I entered here, put the stop loss here, hit a 3% risk, and the trade kind of played out. It was a very uneven trade, but that's just what I did. I wanted to get out, and then I kind of regretted that, and I entered a new trade with a higher percentage and a lot tighter stop loss, which I shouldn't have done. This is one of my biggest mistakes. This is what I did, and paid the price for it. Got snapped right out of put my high above this candle right here, and it just snapped, hit me, and I just was basically, you know, providing liquidity. So I provided liquidity there, and then it went exactly to my bias. So that's a lesson learned. Next time I either put it here if I want to take some decent shorts, I'll put it above this level here and let it ride. It won't look at my chart. But saw that that was good, decent, all that. So I just kind of waited. So I just waited for the rest of the week. Wanted to see how it played out. I actually waited and tried to do the same trading strategy here. 007, 007 could have executed there, but I didn't. And I just want to wait for a retest, and playing on last week's bias, it's still going to be a little bit bearish. So I wanted to just do quick sells. And I saw the shadow candle. This is one of my strategies. So I saw the shadow candle and basically wanted to play this. So I'll just wait for this pattern. Boom. So this is the trade. Shadow candle. It was 1, 2, 3, 4, 5 candles. So not only was this a shadow candle, but this engulfing candle basically engulfed 4 of these. 1, 2, 3, 4 of these candles. Didn't really do. Almost finished this. Almost engulfed this one as well, but it didn't. And so I was kind of confident that this could definitely be a continuation play. So I entered this trade here, put the stop loss above that candle, and I wanted to play the 100%, but I didn't. I actually ended up exiting a little bit more. I wanted it to be a little bit more conservative because this is a resistance level here for 1 hour or below. But as you see, it did play out to the 100% like I usually trade, and yeah, this is a good percentage play. So that one went well, created an order block here, and then it went up. So kind of was busy this week, so I didn't look at the charts anymore. This could have been a nice trade. You see that this is a head and shoulders here, so shoulder, head, shoulder, and it went up. So this neckline there, could have taken this, brought it to the neckline, and looked for the TP at 100%. Although it didn't touch, I could have taken profit right below. What my rule is: if there's resistance, I'll take it. I'll take the resistance before whichever comes first. If the 100% comes before the resistance, I'll do 100%. If the resistance comes before, do it right at the 100%. But I didn't take this trade. It'd have been nice to have taken the trade. It'd have been a really big stop loss. The stop loss would have been about 71 pips. So I didn't really want to do this trade. So I didn't wait it out, but it did play out pretty nicely. And I just kind of waited until CPI. So CPI data, see here, didn't really bring any too much data. CPI kind of, it actually wicked, right? So created a lot of liquidity right here. This would have been actually a good trade. As you see, the data came out. CPI data was just that forecast. Core inflation as well was just as previous and forecast. And so there wasn't really much change. So at this point, we know that it's going to be indecision. It's going to be ranging one way or another. You see during the week until the next, well, not the next, but almost the next, until Wednesday, that it was going to be ranging. So that's what it did. Yeah, and so we saw that it created all of this liquidity. At this candle closing bearish, we could have just taken this trade here. Could have said, okay, well, this is what we're going to decide to do. It's a lot of room. We could have did this, right? And it'd been a relatively safe trade. We knew it was going to range, and most likely wouldn't go back up to this level, and so we could have let it play it out. Didn't take that trade. It's busy during the week. You saw that it came, created liquidity. It kind of just, it came down, revisited these lows, broke past these lows, created a double bottom right here, and then went back up. So that's what it did. So I'm glad it didn't take really the trade, and it's good to stay away from the markets to minimize yourself doing that in choppy markets. So if it's choppy markets, play towards your bias. So a lot of people don't trade during that, but yeah. So as you see here, the FOMC decisions, rate decision was 5.5, so there's no change in that. But in this speech, it was very dovish, So it was a rate hike narrative that the rate hike pause narrative was kind of gearing to Dallas Bears, and basically Dollar Bears, Gold Bulls. We knew that was going to play bullish, so that's what it did. And we were just at this point just waiting for the market to play how it wants to play. And at this point, go to 15 minutes. I saw this. I wanted to play the correction. That's what I wanted to do. And I thought I saw a nice little head and shoulders here. And I was at the right shoulder. So I was gonna go straight down, visit this level here, or visit the 100%. So let me draw that up real quick. So yeah, from this level to here, right? You have the 61 and at the 100, and so that was the play. I ended up kind of just letting it stay over the weekend, holding my order over the weekend. Saw that it ended up here. Wasn't the ideal head and shoulders that I like, but it did. It actually broke this resistance here, and we could have taken another trade here. We could have definitely went and added more orders, but we didn't. And it played out, right? If I saw that it was gonna break this trend line here above my entry, I would have probably exited at that point. When in no reason, if it breaks this trend line, comes in here, there's a lot of times that typically we'll see all this, and it breaks, comes back, and typically all retail traders would think, okay, breaking trend line, retest, drive down. Well, I've seen a lot of the time the market will just go up, touch it again, and then continue higher. So at this point, if it would have done this, it would have came, rejected it, came back, went up, I would have been out of the trade. Good thing it didn't. And so I played the first trade there, and it closing it after the market opened today. I just closed it out, right? It's creating an order block here, and I'm not in any rush I'm not going to be greedy at all. It could still place at 100%. So we'll see next week if it does, but for me, I don't care. I'm not waiting. I'm happy with this trade. This was a good trade. I was in it for a while, and yeah, so we let it play out. So overall, this week was a good week. So we had 3 wins, 1 loss. It was a bigger loss than what I thought it should be. So we're up 2 wins on this week, which is great. Yeah. So Christmas is coming up, not next week, but the week after. The only news is the building permits, and I don't think we really care about that. And then the GDP growth rate, of course, that's on December 21st. So we'll see how it goes for that week. Oh, and then lastly, we have the personal spending, PCE. Okay, yeah. So next week will be an interesting week as well. So we'll see. I'll do my analysis from now on. So I'll start doing analysis, and I'll start. I'll do both now. I'll do pre-weekly analysis, biased, and then I'll finish up the week with what I think it is. So thank you again for joining. My name is Khalil, and let's just keep catching these fits.